Hello everyone and welcome back to the channel. This is Fair Value Finder and today we're taking a look at NVIDIA Corporation, NVDA. They had earnings last week and they were good earnings. And after Oracle's earnings today, I'm actually even more bullish on this stock. And I did buy some this morning because I think it's at a fair value and has a very good growth rate. So 175 to 260 is going to be the range that I'm looking at getting into the stock at, and currently it's sitting at 177. We'll get into a bit more of why that is later, but NVIDIA is doing everything right. And Oracle, if you watched my last video, I feel like they're doing a lot wrong. Like, they are investing very heavily into AI, renting out data centers. All of that revenue is going towards NVIDIA and other companies who have parts that are utilized for these AI data centers. But NVIDIA is doing it off pure cash flow. These fundamentals are incredible. And Oracle's fundamentals were awful. They had way too much debt. They were issuing shares to help pay it down. It's bad. A 40% pop in Oracle today and only a 4% pop in NVIDIA. My money went here. Smart money went here. A fair value, as I said, 175. Current value 177. It's been as high as about 185 and as low as 80. Earnings, it's currently trading for a 40 PE, which is reasonable. So this earnings yield, the earnings here are what we'll probably see in about 3 to 4 years, but there is a multiple to this company that makes it so it's pretty reasonable. I mean, if we look over here at the PEG, you see earnings growth rate 41% for a PEG of 0.96. The closer to 1 that is, the more fairly priced it is on an earnings basis. So it is, in fact, slightly low on an earnings basis. And I was watching Meet Kevin's live stream today, and he was coming up with somewhere in the low 2 for the stock. Based off his PEG multiples, so he and I are in a similar boat here. Cash flow yield, have we seen a stock with a cash flow yield this high? 46.85%, on average 33.88. The dividend yield, they only pay out 1 cent a quarter. Maybe in the future they'll raise their dividend. Right now, it's not really anything. I don't really think they need to. If they can continue with these operations and buying back shares, they're pretty good about share buybacks, which is another tax beneficial way to reward shareholders. Instead of forcing them to take the money and take the tax and pay the tax on it, they get to choose when they need to realize those gains, and gives a bit more flexibility. ROE, these numbers are just insane. 91.9% with a debt to equity of 0.41. Oracle's, we looked at, it was over 7. Under 1 is great. Their balance sheet is in incredible condition, one of the best we've seen, with a return on equity. Their assets are paying for themselves again and again. ROI, 36.7%. ROA, so that's return on investments. They're just, beating out the market by 3 to 5x. And return on assets, 65.3%. I mean, this is along the lines of the ROE. It just takes out the debt, and you can still see that's incredible. Gross margins, 75.3%. Net margins, 56%. Both up from their averages. On average, gross 67.5%. Net 39.4%. There's no red flags here. Just very, very large numbers. And analysts are projecting really large numbers going forward. We're seeing revenue growth, 58%. Looks massive, but if you look over the last 3, 69, last 2, 112. It's slowing down, but it's still huge. In the next 2 years, they're projecting about 45%. So it's slowing down quite a bit, but it's not leveling out yet. They're still continuing to grow way faster than most companies are. So for the thesis, I put 40 here. Could go lower. I mean, this is what we're looking at for the next 3 to 5 years. So you could go as low as 30 if you were more bearish, because this is the compound annual growth rate over that time frame. Still puts you in a very good boat here in the future. Share count, they're buying back about 0.5% of shares. Cash flows, we want those in line with the revenue growth because I don't expect it to go too much higher with that cash flow yield. There's room for it to come down. So the cash flow growth could be below the revenue growth. That would be completely reasonable. Assets, massive. I actually want to keep this more in line with the revenues because they're just piling those revenues that they can into more assets. So if we're going with 30, let's go with 30 here. Liabilities are about half of what assets are, maybe a bit more. So we'll go with 20 there. And margins, can they get to 60%? Probably. If any company could do it, they definitely can. We can go with 0.5% here. And so this should be bringing down what we were looking at here. Originally, that was a pretty bullish case. Like I said, Oracle earnings have me pretty bullish. This is more of a bearish case. I mean, you could tweak down the revenues, cash flows, and everything else more if you don't think that there's much growth left in them. But right now, they're the benefit of the AI spend. Everybody's racing to spend as much money as they can to get the best. And NVIDIA is offering what they need. So with all that, you're looking at average annual growth in the fair value of 36%. And buying at today's price, 177.33, you're looking at outperforming the market by about 2.5x in the next 3 years? And if it continues, almost 4 to 5x in the next 5 years. I mean, they've been carrying the S&P so far. And it's got room to continue. They're making money. Things are looking reasonable. Previous when we looked at them, it didn't because there was a whole lot of hype, but they have lived up to the hype. And I don't think that the market's caught up to reality. So this is my growth stock of choice because there's nothing really bad here unless their earnings don't pan out. You see that? The market's probably going to overreact. And if you think that it's just a blip, a one earnings thing, not a new trend, then that's the time to buy. And then when you think it's the sign of a new trend, you run the numbers, see if it's going to outperform the market. And if not, that's the time to get out. And that's what we're looking at on this one. So I want to thank you guys for watching. Please like, enjoy the video, comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.